South African households are about to experience more financial difficulty as another interest rate hike is expected to take effect next week. This will mark the 10th consecutive hike since November 2021. In this video, we will explore the impact of interest rate hikes on South African households, including the reasons behind the rate hikes, how they affect households, and what individuals can do to minimize the effects. If you are new to the channel, subscribe so that you don't miss future videos. Also see the description box for our amazing offers and more information. Let's turn to our video on understanding the impact of interest rate hikes on households in South Africa. The news is not good for South African households as another interest rate hike is set to take effect next week. This will make it harder for everyday South Africans to make ends meet. In this video, we will discuss the reasons behind the rate hikes, how they affect households, and what individuals can do to minimize the impact. Interest rate hikes are a way for central banks to manage inflation and keep the economy stable. In South Africa, the South African Reserve Bank, CFDs, has been hiking interest rates since November 2021 to address inflationary pressures. However, the consecutive rate hikes have been putting a significant financial burden on South African households. According to various analysts and researchers, another rate hike is expected to take effect next week, making it the 10th consecutive rate hike. The rate hikes have a significant impact on households in South Africa. For instance, the monthly repayments on loans such as mortgages and car loans increase in line with the rate hikes. This, in turn, reduces disposable income, making it harder for households to make ends meet. Moreover, the rate hikes may lead to increased prices of goods and services as businesses try to pass on the increased costs to consumers. So, what can households in South Africa do to minimize the impact of interest rate hikes? One way is to reduce debt. Households can try to pay off their loans as soon as possible to avoid the increased interest payments. Another way is to create a budget and stick to it. This will help households to identify areas where they can cut back on spending and save more money. Finally, households can try to increase their income by taking on part-time jobs or finding ways to earn additional income through freelance work or starting a small business. In conclusion, interest rate hikes have a significant impact on households in South Africa. The consecutive rate hikes since November 2021 have been putting a significant financial burden on households, and another rate hike is expected to take effect next week. However, households can take steps to minimize the impact of the rate hikes by reducing debt, creating a budget, and increasing their income. Thank you for watching.